kind of a general rule of thumb for like a bottom line profitability. If it's your less than 5% net profit, that's a bit of a flag that there's some work to do to bring it up.
Okay.
If you're kind of 5 to 10, that's, you're starting to give yourself a bit of cushion. 10 to 15, you're definitely doing well. 15 plus, you're crushing it.
If you're like me and you hear the word accounting, you're going to cringe inherently. But for today's Ask an Expert, they have a tagline that is "Unf your books," so you know it's going to be much more interesting. Hi, I'm Joshua Carlson, co-founder of Propelo Media, and today I sit down with Spencer Sheinin. He's the founder of a company called Shift Financial. They help cover every aspect of your accounting, but they translate it in a way that makes sense for you. Today, we're going to talk about the 6 primary drivers when it comes to accounting that you should be focused on. There's a lot of numbers that you can get lost in, but there's only 6 that really make the big difference. We're also going to talk about cash flow. Usually you look at cash flow as a way to stabilize a business, but today we're going to talk about how you can use it to grow a business. And finally, we're going to talk about Pareto's rule as it comes to analytics and looking at your customer base. Who are the top 20% of customers that are responsible for 80% of your business? And talk about how they evaluate that and how you can use it to go get more. Now let's hear what Spencer has to say. Spencer, welcome to our Ask an Expert. I'm so happy to have you on.
It's stoked to be here. Thanks so much. It was exciting.
Okay, so I try to do my homework when I head into these. And when I see accounting, I think, this might be a boring conversation. But you guys have a pretty strong tagline, which is "Unf your books." I'd like to just start there. That's a great approach. It's something that's riveting. Why don't you tell me a little bit about that?
Yeah, I mean, to be perfectly candid, I am a CPA. I did it about 20 years ago. And when I was doing my designation, I literally drove to work nauseous every day. I actually hated accounting. Believe it or not, I did. And, I stuck it out because that's what you do, right? And, having a degree is a good thing. So I didn't quit and I finished it. And I actually, after that, became an investment banker and also drove to work nauseous. And it really wasn't until 15 years later, when the circle got complete and I was actually at an event and there was a speaker who was a finance speaker, and he was really good. He's brilliant and smart. And he was talking over everybody's heads. This was a group of entrepreneurs in the room, and they're all like, I know this is important. I don't get it. And I had that kind of lightning bulb moment that I'm like, wait a second, I'm an accountant. I am a CPA, but I've been actually an operating entrepreneur. I've had a few different businesses over the last 15 plus years. And so I speak both languages. The reason why you probably hate it. The reason why so many entrepreneurs hate it is because it's boring, blah, blah, blah. Well, that's because it's a different language. We're basically speaking a foreign language. So I kind of figured, well, I'm kind of the guy that speaks both languages, and maybe I can create this system that actually helps entrepreneurs get past their blind spot and, helping them un-F their books.
Okay, so it sounds like a lot of this is actually just communication style, right? It's breaking down complex topics, which you can't you can't make them any easier, but it's actually articulating them in a way that people understand better.
Yeah, I mean, the basics of accounting still have to be there. You still need the bookkeeper to do the debits and credits and that. The message I'm trying to relay is there's kind of 2 important things. One, there's the format, and one, there's the selection of what's presented. So how do we actually present financial information in a way that's simple, intuitive, and easy to understand? Because it's totally doable. And to do that, it's a lot of data visualization, charts, graphs. If you think of a stock chart, right? Whether you're investing in the market or not, we've all seen stock charts.
Yeah.
And you can look at that and in 2 seconds know, is it going up or down? Right. You don't have to read the company's financial statements to know if the stock is going the right way. Same thing with your financial information presented in a form that's intuitive and easy to understand. It's like, in 2 seconds, I can take somebody who literally rates themselves a 3 out of 10 understanding their own financials and get them to 10 out of 10 in 15 minutes or less, because it's just the right information presented in a way that's simple and intuitive. A lot of data visualization and a lot of just knowing which are the right things to analyze. And then again, turning it into a format that is super easy to understand.
Okay. So talking about the right, numbers to analyze, what are numbers that people are tripping up on right now? What are areas that we need to be a little bit more cognitive of?
Yeah, I'm going to maybe twist that just a little bit and talk about what are the most critical things to really look at rather than being trip up on. And here's the thing, I don't care what business you're in, how big, small, complicated, not complicated. There's only a few key levers within the business, where you can actually apply leverage and really move the business. So if you think about an income statement, and I'm sorry, I'm going to get a tiny bit accountancy for the moment.
That's fine.
But we all have sales.
Yep.
When we've got cost of goods, which is your direct cost to deliver your service or product. Then you've got your gross margin, right? 1A minus B equals C, minus your operating cost equals your gross profit or your net profit. That's it, those 5 line items. But there's actually only 3 things you can do to improve your profit. You can increase sales, either by increased price or throughput.
Yeah.
You can reduce your cost of goods or hold it steady when your sales grow. Or you can reduce your operating costs or hold it steady while your sales grow. That's the only 3 things you can do. And so we get these big sets of complex statements and that's where we get tripped up. So if we can actually create a report that really looks at those 3 levers and shines a light and says, actually, this is the lever that's most out of whack. Like, stop growing your sales because your cost of goods is out of control. You can double, triple your business and you won't make any more money because your cost of goods is out of whack. Let's fix that, then we go to sales. Or look at your operating costs. They're doing really well. Keep doing what you're doing there and let's focus on sales, whatever it is. So it's really shining the light on what we need to do. And that's just such a gap. Similarly, on the balance sheet, which is even more complicated for most people, there's more things you can do there, but for, especially smaller businesses, it typically means accounts receivable, as boring as that is, collecting them faster.
Right.
Inventory, if you've got it, turning it faster, and accounts payable actually slowing down if you can. Not to a point where your suppliers are upset, but can you stretch it by a week, by 10 days? Like, what is that? So those are the 3 levers. Debt and fixed assets are the other ones, which I'll set aside for now. But those other 6, honestly, sales, cost of goods, operating costs, accounts receivable, accounts payable, inventory. If you manage those 6 and you can get reports with nice pictures that show you how you're doing in those 6 areas, that's a game changer for a lot of entrepreneurs who are like, wow, I don't need to go into all of this detail.
Right.
You only need to go into detail to understand why that one particular lever needs to be pulled. That's where the analysis goes.
Okay. Well, so I want to take this a little bit further because I feel like traditionally, I think when we think of accounting, it's the numbers, or it's at least some of the numbers that you're talking about there, but it's typically from that cost savings aspect of it. So maybe it is the cost of goods, maybe it is your operating expense. But really, there's a whole wealth of ways that, by focusing on the accounting, you can actually look at growing the business. Can you talk about how you talk to companies from that standpoint?
Yeah. So one of my favorite reports that I love to give people, and let's use your business as an example. So, I understand a little bit about your business. Just ask a couple more. Do you have customers that you retain month over month over month, or do you tend to have new customers every month as you deliver your service?
Both.
Okay. So if we take a look at your customer list, and let's say I gave you a list that's a rank order of customers based on how profitable they were. Okay. That's, a Pareto analysis is the other way, kind of 80-20 rules.
Yep.
What I see almost every time with these, particularly in a marketing business or a business that's designing to help other people grow their revenue, where it's a customer-based business, the 80-20 rule almost always applies, where 80% of the profitability of the business is representing, the top 20% of the customers is representing 80% of the profitability. And so when we actually give the stack report, which has a nice chart that shows how are we on track or not, the strategic question becomes, how do we get more of these in the 80% and less of these in the bottom 20%? Because that's most of our customers. And when we start to actually build the demographic and the profile of who's the right person to go after, that's game changing for business. Because honest, true story, looked at one example like that. They had 96 customers. 60% of them represented 8% of their revenue. That's 60% of they had to win the job, they had to staff the job, do the work. The job wasn't as big, but you still have to collect it, invoice it.
Right.
Who complains? Your big customers, your small customers?
Yeah.
Your small customers. And then you're on the phone saying, like, why am I on the phone with my smallest customer when I'm not going after it. So how do we get rid of those small ones, or raise their price, or raise their minimum, or whatever it is? And how do we focus on the ones that we really make money? And that exists either on a customer by customer basis, different segments. Like, again, I don't know your business well enough, but, maybe there's like, a lead gen, maybe there's like a email version, maybe there's an inbound version, there's a few different things. And then you can look at the profitability of the different segments in your business to know which segment should I be growing, because this is the profitable one.
Right.
And then it just becomes so clear when it's like, wow, I've been going after customers that all I'm doing is turning money and like frustrating my team on, and they're not doing anything for us. So that's the type of sort of deeper dive that I just get super excited about. I don't love accounting, but I love the analytics.
No, yeah. Well, and that's refreshing because it can actually make meaningful change to the business. So as we talk about profitability and we talk about, doing that analysis and looking at, a roster of the customers that a business has, do you have recommendations for, is there a gross margin that you should be shooting for? Is there a profitability, metric? What are your recommendations to businesses? Because I feel like a lot of times they're like, hey, well, we made money, and they're maybe not putting as much emphasis as whether that was $1 per client or $50 per client.
Yeah, I mean, it really does become a little more industry specific. Service-based industries tend to be higher margin. Yep. Manufacturing tends to be leaner with bigger volumes. You can't tell from this angle, but if I turned around, the bald spot I have back here is 100% because I was in manufacturing for 15 years. Okay. That's a tough business. Kind of a general rule of thumb for like a bottom line profitability, if it's your less than 5% net profit, that's a bit of a flag that there's some work to do to bring it up. Okay. If you're kind of 5 to 10, that's, you're starting to give yourself a bit of cushion. 10 to 15, you're definitely doing well. 15 plus, you're crushing it. Okay. So from a bottom line, those are kind of the categories. North of 10, generally good. North of 15, awesome. Right. If you're 1 or 2%, something goes wrong, you're going to be in the red really fast. So,
okay. If we'd had this conversation 3-4 months ago, one of the popular buzzwords that we would definitely be talking about would be cash flow, but it would be cash flow to almost save it. But I'd like to talk about it now and how we can leverage cash flow to actually grow a business.
And how do I say this? Cash flow shouldn't only be a priority when you're facing a crisis. Cash flow should be a priority. And like literally at a minimum once a month, you should be looking at a cash flow forecast. And if you're stuck with that, that's a different issue. I can send some contact details and I can maybe point some resources to you, to any of the listeners. But for me, cash flow is a critical thing to be looking at. If your cash flow is decent, I'd be looking at it on a monthly for say the next 12 months. Okay. The further out you push a cash flow forecast, the less relevant it's going to be. Right. If you're actually up against it from a cash flow perspective, I'd really be looking at it on a weekly basis for say the next 3 months. It might be harder to kind of look beyond that if you're doing the weekly. And if things are really tough, you can actually take it down to a daily. Like, look, we need this check-in by Tuesday. So let's pick up the phone, call the customer, say, hey, do you mind if we send a courier to pick up that check? So depending on what the need is how scarier, pull it tight. Sure. But man, I want to know exactly where cash flow, that should be the first report I'm looking at every month, what's going on with cash flow.
Right. So,
to be fair, I wanted to make sure I made the point of how critical it was. I might've missed your actual question in there.
No, it's basically, I think that cash flow is something, it's just like our own personal finance, right? You should be knowing where cash is coming in and where cash is going out, and you should have your pulse on that. So I like what you're saying, this should be looked at least monthly, but just from the standpoint of like, hey, how do we optimize cash flow? Because I think, again, 4 months ago, it was like, hey, we're just in survival mode. But right now, every thought leader I'm talking to is like, hey, we should be in aggressive mode right now. And cash flow is a lever that we have that allows us to be more aggressive. But what are the levers that help us increase that cash flow?
Okay, cool. So 2 thoughts to that. One comes back to my initial comment about the different languages. I would start by bringing the two languages together, where you actually have a cash flow forecast with something that looks like a stock chart, so I can actually see what does it look like going forward, where are the dips, where are the peaks, and how do we then manage those. And then below it, actually having the Excel spreadsheet, or if you're using an online tool, cool, have that on there as well, so that if you're sitting down with your team or you're sitting down with your accountant, you can have a meaningful conversation about the push and pull. And, you know, if you're not good at with the spreadsheets and numbers, you've got the picture. And if the people that are, you know, the nerds like me actually like the spreadsheets, which I do, then I get to use the spreadsheets. So that's sort of number one. But in terms of, you know, how do you actually influence cash flow? It actually comes back to those 6 levers.
Okay.
Increase price, decrease cost of goods, decrease overhead costs, collect faster. And the number, so like I see a lot of financial statements. So like almost every week I'm seeing 2 or 3 new sets of financial statements as I'm talking to people and meeting people. Slow accounts receivable is a shockingly easy way to get some cash in the door. Right. It's just the number of people that lose sight of it because they're busy with other things. And it's a fairly easy procedure to put in place just to get on top of it. Pay slower and inventory turns. Those are your only 6 levers to actually make cash flow from an operational standpoint accelerate. And bringing it back to those 6 things, you know, and it's going to be hard to see on this. And this is kind of like a little tool I created that literally goes through these levers top to bottom. Is it good? Is it bad? Yeah. Is it okay? And then whichever lever is the worst, that's actually how you're going to turn, that's how you're going to create better results in cash flow, by moving those levers. And one of my frustrations with accountants and reporting is like, here's some ratios. It's like, well, great that my current ratio isn't awesome, but what does that mean? Well, it means you fix one of those levers, whichever one's out the most, and then your current ratio will solve itself. But just here, entrepreneur, your current ratio is 1.2. Okay, what do I do with that?
Well, so talk about, can we give a practical example of what that ratio is that you're talking about?
I mean, I can. I mean, I generally don't love ratios. I mean, current ratio is literally current assets divided by current liabilities. Okay. If it's above 1, that's generally good. If it's less than 1, that's generally bad. The problem I have with ratios is unless you're sophisticated enough to really understand them, they don't really tell you what to do. Okay. And so I literally bring it back down to as simple as, we've got these 6 levers. Is it good? Is it okay? Is it bad? If it's good, i.e. we're ahead of budget, we're ahead of last year, we seem to be tracking according to plan, cool, we're just going to keep doing what we're doing. Right. If it's okay or bad, now it's like, okay, well, why is it bad? And that's where you probably need a little support with the actual analysis, doing kind of that, you know, rank order profitability as an example, or maybe looking at some labor analysis and seeing like, is my labor cost getting out of control? Those types of things. And there can be some relatively simple analysis to do that. Like, are we ahead or behind budget? It doesn't have to be complicated. Are we ahead or behind last year? Right. You know, how's labor tracking? For most small business, those 3 things are going to tell you most of what you need in order to pull the right lever. Of course you can do more. I just worry that people get too worried about doing too much digging without just acting on the ones that are the most obvious. Sales are down from last year. We need to focus on sales. It's not, you know, it doesn't have to be as complicated as a 20-page report of spreadsheets that you have to dig through.
Well, like you mentioned, Pareto's rule. So, you know, whether we're looking at customers and trying to identify, hey, these are the type of customers we want more of, or whether you're looking at those 6 levers and saying, hey, this is the one that's really off the farthest. Just focus on one. Just focus on one area.
I mean, if your accounts receivable in total is 30 grand, and like 4 of it's overdue, like, make the call, but that's not going to move the needle. The needle is going to be moved more somewhere else. So the question is, I've got these 6 levers. Which one do I need to move? What analysis do I need to do? I mean, we can talk about a few of those analysis, but, and I'll give you kind of the first 4 from a simplistic point of view, from easy to a little bit less easy, but the most impactful, assuming you've got a budget, and you should have a budget, budget versus actual. If you're off budget, that's a red flag that something's off. Prior year compared to actual. So how am I doing year over year? Am I trending the right way, or am I trending the wrong way? The third one is a labor analysis. Now, whether you do that labor as a % of sales, whether you do that as labor utilization, depending on your business, whether you do that as a labor efficiency ratio to see, sales divided by labor to see how many times my labor is actually creating, how many dollars of revenue per dollar of cost. So that's the third one, something to dig into labor, because labor is for a lot of businesses the number one cost. And then that profitability analysis, whether it's by customer, by job, by segment, by if you're selling products, by product. If you do those 4 analysis, it's usually enough once you've identified which lever you need to pull to dig that one level deeper. Sure, if you're a 20, 30, $50 million business, you're going to need more sophisticated digging. But for businesses that aren't that size, it doesn't have to be as complicated as we make it out to be.
Okay. So I want to shift gears a little bit. You've written a book.
Sure.
And I'd actually like to talk about, prior to getting into the content of the book, what spawned the drive to actually put one together?
Yeah, interesting. And I'm actually in process of my second book, so it wasn't a horrible experience.
Okay.
So the book is Entreprenumbers, The Surprisingly Simple Path to Financial Clarity. And I think really it comes out of my personal why. So my why is I believe entrepreneurs can change the world, and my role is to help them through their financial blind spot.
Okay.
So I just have seen, and it was kind of like that event I talked about where there's the finance speaker who was over everybody's head. And it was actually a guy at the table who looked at me and said, "Hey, can you help me with this?" Because he knew I was a CPA. And I just had that aha moment. And I'm like, this is such a stuck point for so many entrepreneurs. And I say with love to a lot of accountants don't often know how to talk to entrepreneurs. The same way that entrepreneurs aren't trained on accounting, accountants aren't trained on entrepreneurship. So, and I just felt I could actually make a difference and have an impact for so many entrepreneurs, and then they can have the impact on their world around them, whether it's their, providing more jobs, whether it's if they have a particular pet project or issue that they choose to support through their company or personally. I just feel like the more I can arm them to be successful, the more positive impact that can be had from there. So that was my underlying, and I mean, a little bit of business development, let's be honest, that doesn't hurt. Do some thought leadership and just be recognized as an expert in the field is a nice side bonus.
Okay, so let's actually talk about the content of the book.
Sure.
Helping entrepreneurs. I love the vision. It echoes another guest that we had on, Sasha Strauss, talking about the turbulent environment that we're in right now, and he really sees business and entrepreneurs as kind of the saving grace right now that are going to come in and help fix a lot of the issues that we have. So let's talk about how you're helping the entrepreneurs fix the numbers issues.
Cool. Yeah. So I'm pretty excited about it. So I kind of cover a few kind of high level items. Number one is just why it was such a problem for so many entrepreneurs. If we can understand where the stuck points are, it helps us unlock them for the future. So I just explained there's a few key issues. For example, just not understanding what an accounting department looks like. You think of a construction site with a general contractor, subtrades, and laborers. Well, in an accounting department, you've got a CFO, controller, and bookkeeper or clerks. Well, a lot of small businesses only have a bookkeeper.
Right.
Well, that's kind of like building a house with just a laborer. They're part of the process. It's not a dig at bookkeepers or laborers. It's just that's not the complete picture.
Right.
So that's an example of one of the problems that I kind of highlight in the book. And it's very story-like. I try not to sound like an accountant. I talk about the levers is kind of the next piece, just explaining, going into a little more depth than what we just did.
Yep.
And then I get into two key things. One is, what is the what I call the insights roadmap, how to get the insights out of the business. So there's the hygiene of the business. That's the stuff you think of as accounting, but that's not for you. That's for nerds like me who are accountants. The hygiene is the day-to-day accounting that has to be done. And yes, it has to be done right, but really it's there to inform the insights of the business. So I go through what is a really great package look like that's intuitive, easy to understand for entrepreneurs who are stuck, frustrated, or embarrassed by their books. This is unlocking it for those of you that are stuck, frustrated, and embarrassed. And then I do the last section is on the hygiene, just some things to help move the hygiene. Of course, it's not an accounting lesson. I can't teach all of accounting in one book,
Yeah.
But it's the guide to empower entrepreneurs to confidently direct their accounting teams to get what they need when they need it, but more importantly, in a format that works for entrepreneurs. So if you don't even know what to tell your accounting team, that's what this book is for. It's to
Sure.
empower you to feel like, I know how to actually get what I need now.
Okay. So you mentioned biz dev for the book, kind
Mm-hmm.
of a little shamefully, but I actually
Yeah.
want to talk about that because I think it's an underutilized aspect of generating
Mm-hmm.
content. So I don't care what that content is.
Yeah.
You are an expert, you run a business, but you realized, hey, if I could be a thought leader, not only can I help people, but there can be benefit for my business. So I'd like to talk about
Totally.
what that benefit has been for your business.
Yeah, totally. And not just print thought leadership, doing stuff like this, I speak quite a bit as well.
Okay.
So, I think it's all about presenting yourself as an expert in the space and doing it thoughtfully and professionally. And I totally agree. Like, that's most of our clients have come from those types of touch points. So I think it's hugely important. And then in terms of my journey with this book, so I launched it in February 28th of this year.
Okay.
So we're going to say 2 weeks before COVID shutdown really happened. So timing was probably suboptimal.
Okay.
But, I'm very proud. It actually became an Amazon bestseller sort of before that all happened. So that was actually very purposeful and intentional. We put energy into what are the things we need to do to become a bestseller from a credibility standpoint, and to be introduced that way is actually really important from maybe I should listen to this guy. So that was a point. And from then, what we've started to do is actually come up with a couple of campaigns. And I think we talked about this on our call before from a couple of weeks ago. We've actually created some campaigns around this where, for example, we think coaches are a good potential referral source for my business, because if you're a business coach and you can't get good financial data, it's really hard for you to help the business make better decisions. So we would literally take a copy of the book, we would start by connecting on LinkedIn, saying, hey, my name's Spencer. I have this new book that just came out. Are you interested? I'm happy to send you a copy. It might be a resource for you. And so we did that. We got a bunch of yeses. Pick one up, drop it in the mail with a personalized card, and then follow up with a conversation. And hey, how can we work together? And then we have sort of our sales process that takes somebody from a referral source and brings them where we actually can start to work together with them to build some clients. So we actually really made a whole campaign and program out of leveraging the book, especially post-COVID. It's like that fell off everybody's radar. So I'm like, well, we got to do something. I mean, I'd rather people buy the book than I send them a free copy. But from a BD perspective, our clients, our prospective clients are significant enough that for us to invest in sending some books out is really worthwhile.
Okay.
And then I'm going to layer on one other thing. I don't mean to occupy all this space. One of the fun things we did as well, and I really enjoy this type of campaign work, is we would also send people a pair of socks that's branded with Entreprenumbers, and it'll have a branded card that says replacement socks. And it's like, what is this? You open it up and it says, put these socks on when yours got blown off after reading Entreprenumbers. Just get people to have a laugh and just get inside their mind and get them in a good frame of reference before they even pick up the book to begin with. So we had some fun with it.
Well, and you should. I mean, I think we need more fun in business, because I think that
Totally.
Better state of mind, you're just going to be able to come up with more ideas, which ultimately are going to benefit the customer. The process itself, though, so you're an expert in the space. So you're a great thought leader, and I love that you communicate. You're this bridge between the analytics and the actual, layperson. Writing the book itself, what was that process like? Because I feel like when we think of content, I know that I've thought of this, and content has struggled. And finally, I found a format that works really well for me. But when you're starting from zero to actually a finished product, what was that process like for you?
Yeah, so I'd already done a fair amount of speaking on this topic before I got to the book. So kind of the framework of the book was already in my mind. And then I worked with a company called Scribe Media, And what they do is, because I tried to write it several times and I'm a procrastinator and I'm an entrepreneur and I'm busy with other things. So Scribe has a service where they're not ghostwriters. And I want to be super clear that I didn't have this book ghostwritten, but I got interviewed and they brought me a first, like they actually drafted based on our interview, a first cut. And then I spent most of my time actually in the editing process to make it my voice, to make sure it came out the way I wanted. And I was working back and forth with their company on doing that. And then they also went through, and for me, it was kind of like, okay, I don't want to learn how to become a publishing expert. I don't want to learn how to do this. And so part of their package was literally handling all of the publication, the editing, the layout, the cover design. So they were a full package for me. And I'm happy to talk to anybody about my experience with it, because I was actually really impressed with them. Whereas with my second book, I'm actually choosing to write the content and then hiring out sort of the rest of the editing, the layout, and the stuff that I never want to know.
Yep.
And to be totally clear, like, this first book was about, you know, elevating my status as a thought leader, doing some business development, helping entrepreneurs, of course. So, you know, like, I'm never going to sell enough copies to pay back what I invested in terms of cost, especially if you put all the marketing costs on top of it.
Yeah.
Whereas I'm hoping this next book might actually be at least a break even.
Okay. Well, the big takeaway that I have there is that I think, you know, again, when you're starting with this white piece of paper, it's intimidating. And what I'm hearing, both the way you did it the first time and the way that you're doing it now, is you're soliciting help. You know, it's different capacities for each one, but, you know, hey, go out and get somebody to be the crutch that gets you to the finish line, because getting to the finish line, that's where you actually start materializing things.
Yeah. And it was a solid year and a half in the making. Like, it wasn't a 1 week process. And I mean, I mentioned before, like, all the speaking, I hired the best speaker coach I could find, so that when I was in front of an audience, I have the right content, I have the right, you know, there's a flow to doing this stuff as well, that just, you know, I don't want to call it a formula, but there's some best practices. So if you can be working with, you know, whether it's a coach or an publisher, whoever it is, to help guide you through the best practice, then you're not just shotgunning on your own either. Because, you know, why reinvent the wheel? Like, there are a lot of books out there, and there's a pretty clear path to what is a good book versus what is a garbage book.
Right. No, sage advice. So let's shift gears a little bit. I want to throw a curveball and get your input on this. Blockchain, crypto. What are your thoughts on it as it pertains to just in general? I know blockchain as a technology is fascinating. Cryptocurrency is something that's interesting as well. What are you seeing in the marketplace with clients that you talk to?
Yeah, so to be totally candid, the clients that I work with, I can only think of one that's even playing in the crypto space. It's certainly not my ever expertise. I think at one point I owned 1/10 of one Bitcoin when it was worth $3. Somebody like sent me one just so I could understand what it was. I think I still have that 1/10 of a Bitcoin. I don't know where it is, but it's probably worth a decent amount at this point.
Sure.
So, you know, I'm certainly not my ever expertise in terms of blockchain. I mean, the thing that is to me most interesting on that front is really on the automation of accounting and being able to audit transactions and ultimately eliminating an audit, because if you can evidence through other ways, you're actually auditing more the processing rather than the actual numbers, because we can actually start to really automate that type of thing. I mean, the amount of automation and bookkeeping that's happening it's really happening. Well, it's happening fairly slow because of adoption, but the actual technology is moving quite quickly. And layering on something like a blockchain, it just creates an extra level of security. I don't hear it talked about a whole lot though. I really don't, not in my space, not with my clients, and even kind of with the other accountants I talk to, I just don't hear it as being what they see as the primary driver right now.
Okay. Well, it's obviously had a surge a couple of years ago, and it's curious in the background, specifically from my standpoint on the technology side. So I'm glad to hear what you're saying, you know, the application that it has. Let's shift gears again. You're an ultra athlete. I'd like to talk about how you got into that in the beginning.
Yeah, I mean, it's kind of been a weird thing where kind of in university, after university, I started running a few marathons, road marathons, did one Ironman, just sort of ticked the box there. And then actually spent a lot of time really injured, back and knee injuries. And I kind of figured I was done with running. Managed to find the right practitioner, kind of healed those two issues, and just started running with a group on Tuesday nights. And running on Tuesdays became my favorite night of the week. And there was like 6, 8, 10 people, depending on the time. And they were all ultra runners. And I was like, this is insane. And, it kind of rubbed off. Like I didn't mean for it to. And before I knew it, I'd signed up for my first 50K. And then I signed up for another 50K. And then I signed up for a 50 miler and worked at 100K, 125K. And the longest sort of running race I did was 160K, 100 miles in Washington State, in the mountains in Washington. There was 22,000 feet of elevation gain and 22,000 feet of elevation loss during the course of the race. Yeah. So it was, that was kind of when I got into it in my mind. I'm like, yeah, I got to do 100 miler. Like I'm going to do it. And I literally took a couple of years to just build up to it. And well, what is 50 miles? I was like, yeah, it sucks. Okay, well, I'm going to do more. And just a lot of sort of life lessons come out of it too, and it's kind of wonder why I'm doing it. Really short memory, because in the running 6, 7, 8, 10, 15, 20 hours, like this sucks. It's just not fun. But there's just so much to be gained out of it as well.
Well, and that's what I was going to ask you next is, how have you seen that shape kind of your professional performance?
Mm-hmm. Well, what's super interesting is I'm shifting quite a bit around that, and I'm moving partly again because I've experienced some more chronic back issues, and it's been a frustrating journey lately. And I've moved to more high intensity short. So either it's a HIIT workouts from a physical standpoint, but even at a work as well. Like I tend to be a pretty good grinder. You probably get that sense that I work pretty hard. I play hard, and I hit a real big patch of burnout where I was running ultra marathons. At the time I had 3 different operating businesses, and at one point my body just like, no, you're done. And it took me a while. And so now what I find both at work, I'm much more effective doing short bursts of intense work, walk away, take a break, come back. Whereas I used to just sit at my desk all day, food at the desk. Yeah. I'd get up to maybe go to the bathroom, and it would be back to back to back to back. I had that the last couple of days, and I don't feel as good. Same thing, like on my bike now, if I go out and I don't know if you know Zwift, but I've been riding a lot on Zwift, which is like an online, you literally connect your bike to a trainer and you're riding in virtual worlds with other people from around the world. Second life, but for athletes, and you're actually riding. Yep. And so, I did like a 70K ride, and I was just done the rest of the day. Whereas if I do like a 30-minute ride where I'm like about to puke the whole time, I get off and I feel energized. Same thing with work. So I've actually sort of changed from like that in ultra endurance mindset to a sprinter's mindset. Get in, do the work, take a break, recover, get in, do the work, take a break, recover, which I'm finding working both. And it could also be that I'm now in my mid-late 40s. I don't know.
Well, what I like about it is I think that a lot of us have gone through a lot of change in the past, few months, and a lot of us are working remote, which is something, maybe we did a little bit, we traveled and we worked out of a hotel room, but now it's there's some permanency. And what I like, and what I personally went through, because I went remote about 2 years ago, is that I was doing the same type of work, the same type of grind that I was used to doing in the office. And I wasn't conscious of how it was really impacting my performance until I had a light bulb moment, like, hey, I need to change it up. And in changing it, I discovered a better format, but it was only through that change that I discovered that.
What's that format? I'm curious.
So breaking it up was a big one for me. So really consciously breaking, because I think, in the office format, we have an ebb and a flow, right? There's just interruptions that happen nonstop. It used to be back in the day, you're like, oh my God, I can go home and I can work, 8 hours and I can get 16 hours of work done that I would be in the office. Yeah. Well, I found that I was effectively burning out in isolation. It was a weird sensation.
It's interesting because when I started Shift, my current business, and that's 4 years old now, I built it to be totally remote. I actually took everything I didn't like about all of my other businesses, and I did the opposite with this business. And one of the things was I didn't like having an office. I didn't like having the commute. I didn't like having, you know, if we had a slow month, I still had to pay all the rent and, you know, things
Right.
like that. So we built we've been a remote culture from day one. And I actually love it. Most of my team loves it, but we actually have a couple of people that actually want to work in a shared office space because that suits them as well. So it's
Sure.
not for everybody. But I totally hear you. Some people will absolutely burn out on the working solo, especially if they're like a creative or
Yeah.
they need that human interaction.
Yeah. And so just being conscious of trying something different to see like,
Yeah.
hey, because to your point, I'm in my mid 40s and you
Yeah.
body life change, like a lot of, you know, things slowly change over time and you need to be conscious of it. Is there anything that we haven't covered that you think is important that we should talk on?
Yeah. Great question. I mean, I think you did a good job of kind of hitting the thing. I mean, there's a couple of things that I'm happy to offer if anybody's
Sure.
listening to this. I do limit it to 5 because I've done this a few times and I only have so much time. But so, you know, what we do and what I'm super passionate about is taking somebody's financial information and turning it into something that's easy to understand, usable, insightful, that actually changes their business. Like
Right.
we are a full outsourced accounting department, but the thing that, yeah, we do the bookkeeping. That's only because we need to do it in order to do the insights.
Right.
So if anybody's listening and they are on either QuickBooks Online or Xero, we've developed our own software because I hate reporting out of existing accounting softwares.
Yeah.
So we've developed our own. We can connect an API, and I'll have a one-on-one session with you, no cost. This is my gift to the first 5 people that email me. Spencer at shiftfinancial.co, not .com, Spencer at shiftfinancial.co. I'll connect it to the API and set up a one-on-one meeting with you and actually deliver your information in a way that that I almost guarantee will be the easiest, most intuitive and usable information you've ever had. And then I can also point out any gaps or issues I see in terms of how your stuff is set up.
Sure.
I do this literally every week, at least a couple times a week. I love doing it and I know I can offer value that way. So
Right.
That's one thing I'm happy to offer first 5 people that reference this
Yeah, no,
conversation.
I think that's great because again, I think especially a lot of, you know, smaller businesses, they're really good at whatever their passion is, whatever got them, whatever that business is. Unfortunately, with every business come along necessities, accounting being one of those, and you just kind of bootstrap it and you don't realize how much better it could be.
I describe it like the difference between flying in first class or in the back of the plane on an overseas flight. If you've only ever flown in the back of a plane, you know it's kind of uncomfortable. You know it kind of sucks. You know there's something behind that curtain, but you don't know. And then you actually somehow you get upgraded or whatever.
Sure.
You're in first class for an overseas flight. You're like, this is actually quite comfortable and enjoyable. And then you go back to the back. You're like, well, I can't live with this anymore. So like you say, I love that analogy because it's kind of true with how people feel like accounting when the clouds actually part. And it's like, oh, now I get why people say this is so important. I never understood that before.
All right. Well, thank you. Thank you for sharing. And thanks for
offering.
I'll
do one last thing, if I may. Entreprenumbers.com. There's also a bunch of free downloads. Some tools and resources that people can go to if they're feeling stuck, frustrated, or embarrassed. Feel free to email me. I'm happy to have a conversation. And I'm also happy to do that free session for 5 people that call in or email me first.
Well, we'll make sure that we include those links in the show notes. That way people can access them easily. So
amazing.
All right. Well, Spencer, I thank you. I look forward to having you back when your new book's out.
All right. I'm targeting earlier than this time next year.
That's fair.
How's that for uncommittal?
I think that's smart. That's called smart committal. So we'll look forward to having you.
I'd love it. That'd be great.
All right. Thanks, Spencer.